Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A U.S. federal court halts President Trump's tariff juggernaut, rules that he overstepped his authority by invoking an emergency law to impose sweeping tariffs on numerous countries. The Trump administration appeals the ruling even as it explores other legal options to impose tariffs. Defending the tariffs in court, the Trump administration argues that any legal setback could put the India-Pakistan truce at risk. Commerce Secretary Lutnick tells the court the ceasefire was only achieved after Trump intervened and offered trading access to avert a full-scale war. The Sensex and the Nifty end with marginal gains after a volatile session. India underperforms other Asian markets, which saw strong gains after the U.S. court order blocking Trump's tariffs. European markets also move higher. The Reserve Bank's annual report shows that the balance sheet is up more than 8%. Net income jumps 27% on forex gains. The value of gold holdings up 57% as the central bank adds 54 tons of fresh gold in FY25. The RBI report shows a 33% drop in bank frauds in FY25 compared to FY24, but the amount involved in frauds rises nearly threefold to more than 36,000 crore rupees. Public sector banks account for 71% of the fraud amount.
With President Trump, crypto finally has a champion and an ally in the White House.
U.S. Vice President J.D. Vance attends a Bitcoin conference, declares U.S. government rejects regulators and promises to fire anti-crypto regulators like the current SEC chairman Gary Gensler. Bitcoin prices are up 60% in the last 12 months. Tesla CEO Elon Musk leaves the Trump administration after a 5-month stint at the Department of Government Efficiency. Tweets that his scheduled time has come to an end. The announcement comes days after he criticized Trump's so-called big, beautiful tax cut bill. Nvidia reports a record quarterly revenue of $44 billion. This despite its inability to ship semiconductors worth $2.5 billion to China following the U.S. restrictions. CEO Jensen Huang warns against curbs on China, saying the platform that wins in China will lead the world. Hailey Bieber sells skincare brand Rhode to E.L.F Beauty for $1 billion just 3 years after incorporating it. This is E.L.F Beauty's biggest deal yet.
President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
Oh, isn't that nice? Chicken out. I've never heard that yet.
Well, President Trump enjoys his fast food, but not tacos. Reporters' question on the so-called taco trade leaves the president fuming. We will explain in just a bit. But the top story this evening. In a big blow to the U.S. President Donald Trump, a federal court has blocked his so-called reciprocal tariffs under emergency powers. The Court of International Trade in New York declared the orders issued on what Trump called Liberation Day as illegal and an overreach of power. Now, the court has not only put a permanent halt to most of the tariffs, it's also barred any future modifications to them. The Trump administration was swift to appeal the ruling. Trump is yet to respond to the ruling, but a White House spokesperson claimed that unelected judges cannot decide how to address a national emergency. In an attempt to justify the tariffs, the Trump administration cited the recent ceasefire between India and Pakistan. In a submission to court, U.S. Commerce Secretary Howard Lutnick said, and I quote, "This ceasefire was only achieved after President Trump interceded and offered both nations trading access with the United States to avert a full-scale war," end of quote. Lutnick went on to say that any adverse ruling will constrain presidential powers and could lead to India and Pakistan questioning Trump's offer, which in turn threatens the security of an entire region. The judge did not accept this argument and ruled that sweeping tariffs invoking an emergency law was an overreach. Surbi joins us now with more on the U.S. court's tariff order and its implications for the Trump administration and his tariff juggernaut. Surbi.
Well, almost 2 months after it was unleashed on the world, the Trump tariff juggernaut has finally hit a legal roadblock. On Wednesday, the U.S. Court of International Trade struck down a series of executive orders which had put Trump's global tariffs in motion. The court's view is that the International Emergency Economic Powers Act, which the U.S. president had actually invoked while declaring a national economic emergency back in April, simply doesn't authorize him to take unilateral tariff calls and levy universal tariffs. Basically, the court has said that Trump has overstepped the authority that was granted to him by the legislation. And those are the highlights that we just had on the screen earlier. These are the executive orders. So let's talk about what these executive orders were, which have been struck down. Now, the court has basically said that there are 4 executive orders that have been struck down. So let's start with the latest one, Executive Order number 14257. With this order being declared invalid and quote-unquote contrary to law, Trump's 10% baseline tariffs, as well as the reciprocal tariffs, which were levied on countries around the world, become null and void. The other executive orders that have been struck down render the fentanyl tariffs levied on Canada, Mexico, and China invalid. Finally, the court order also strikes down the 25% tariffs levied on goods that were not covered by the US-Canada-Mexico agreement. It is, however, important to note that the 25% tariffs on steel and aluminum remain unaffected by the court's order, as these were imposed under a different act, a different piece of legislation, and I'll come to that in more detail in just a bit. So what happens now? Well, the US administration has already swung into action, and it has challenged the trade court's order at the US Court of Appeals. Legal experts feel that this battle, in all probability, is likely to head to the US Supreme Court. Now, in the meantime, Trump has several other legal options in his arsenal to keep the tariff heat on. The first of them is a wider use of Section 232 of the U.S. Trade Expansion Act. Remember the steel and aluminum tariffs, which I just spoke about, and they're still in effect? Now, they have been levied under this very section of the Act. Trump could expand the scope of this Section 232 to other sectors as well. In fact, the administration is already evaluating potential tariffs on aviation, on electronics, and pharma imports under this Section 232. So watch for this. Next, there is the U.S. Trade Act of 1974. Section 122 of this particular act allows the president to levy a baseline tariff of up to 15% to address quote-unquote balance of payment concerns. And, the current trade issues could fall in this category. The levies can last up to 150 days without the need for any sort of congressional approval. Let's move on. There is then the Section 301 of the same U.S. Trade Act. This allows the U.S. government to launch a wide trade investigation against any U.S. trading partner and then impose tariff levies. However, this could be a very cumbersome and time-consuming route, so may not be the U.S. administration's first port of call. Finally, there is the option of using the U.S. Tariff Act of 1930, which has not been used till now. The section number 338 of this legislation allows the U.S. to levy up to 50% tariffs on imports coming from countries which discriminate against the U.S. That's a pretty wide term, so it can be interpreted in any way. Now, as the tariff war takes a legal turn, here's a statement from the White House spokesperson, Kush Desai. This was immediately after the court order. He went on to say, and you can see it on the screen, it is not for unelected judges to decide how to properly address a national emergency. So this was first. And then we had a social media post from the man himself, Donald Trump. And it's very cryptic, but he goes on social media and he says he's on a mission from God and nothing can stop what is coming. Now, it's cryptic, whether it means more tariffs, the use of any one of these factors that I described, only time will tell. But the markets could be rejoicing for now in the interim. However, the only thing that is certain after Wednesday's court ruling is that this is only round one of the legal battle, that the U.S. president has a wide array of legal and executive options in his arsenal to keep the tariff blitzkrieg on.
So, Ruby, many thanks. Well, the markets are not rejoicing. They are waiting to hear from President Trump and anticipating what possibly could be coming, in his words. In fact, the Dow futures have given up some of the gains that we saw early on. Global markets did cheer the court ruling that blocked Trump's reciprocal tariff. Stocks in Asia Pacific and Europe surged, as did Wall Street futures. The US dollar rallied in a knee-jerk reaction, providing some relief to the currency that had weakened amidst the trade uncertainty. But as I pointed out, US futures have given up some of those gains. Wall Street has been abuzz with a new term. It's called taco trade, where taco is short for Trump always chickens out. The phrase, first used by a Financial Times commentator, is meant to describe Trump's on and off tariffs and the manner in which stock markets respond to them. And this has left President Trump fuming. When questioned by a CNBC reporter about taco trade, Trump referred to it as a nasty question and defended himself, saying he had never chickened out in trade negotiations. Here's that exchange.
President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
I kick out?
Chicken out.
Oh, isn't that nice? Chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number. And I said, you have to open up your whole country. And because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. Please, let's meet right now. And I said, okay, I'll give you till July 9. I actually asked them, I said, what's the date? Because they weren't willing to meet. And after I did what I did, they said, we'll meet anytime you want. 6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation.
Well, that's President Trump on the taco trade. Now, back home, the Sensex and the Nifty ended with marginal gains after a volatile session. The Nifty ending above 24,800, largely led by IT stocks today. The Sensex closing 300 points higher, 81,633. The Nifty Bank up by over 100 points, and it's a 300-point higher on the Nifty mid-cap as well. Now, the Reserve Bank's annual report for FY25 has showed the balance sheet is up more than 8%. Net income rose 27% on forex gains, while the value of gold holdings rose 57% as the central bank added 54 tons of fresh gold in FY25. Lata joins us now with the fine print. Lata.
Well, the interesting takeaway are all over the place. One of them is that the RBI has bought a lot of gold. They have bought 54.13 tons of gold. So the total value that they hold is up by 57%. From 2.75 lakh crore, it's gone to 4.32 lakh crore. Only, 7% of that has come from the actual amount of gold increase by 54 tons, as I told you. The rest is because gold prices have shot up. You would think that 7% is a very big number, but it's bigger. It's the highest in the last 3 years. Last year, their gold holdings, the amount in tonnage rose by 3.5%. The year before by 4.6%. But way back in FY22, they had bought 65 tons of gold. So at that time, it had gone up by 9.3%. So this is not the highest, but clearly the highest in 3 years. The other thing you learn is about why they reported this subdued dividend compared to what the market was expecting. That's entirely because they've increased the reserves, which is why the board met. The board met and said that instead of a contingency reserve of 5.5 to 6.5, they will expand it to 4.5 to 7.5. They've increased the reserves to 7.5. And that means 254 crores more had to be set aside to take the reserves to 7.5%. And if they had not done that, that 76,000 crores would have been added and the surplus could have been 3.6 trillion. But obviously, they probably want to smoothen it out and they could lower the reserves this year, who knows. The other point to note is that they've not made so much money in selling dollars. You know, when the Bimal Jalan committee allowed them to book the dollar profit, the RBI was making some 14-15 rupees every dollar sold because the purchase price was the historical price. But now all that has been juiced out. Today, if you do the math, in FY25, they have earned only about 2.8 rupees per dollar sold. Not a great deal of profit because a lot has already been juiced out. That could be the reason why they wanted to change the reserves and give elbow room in the future. Finally, the most important part of the annual report is the economic outlook. No surprises there, except some extra optimism, more than we were prepared for. The global outlook is, of course, bleak. They point to the slowing disinflation. That's important. High public debt, highly leveraged governments, geopolitical and trade tensions, market volatility, and, of course, climate shocks as well. On the domestic economy, the objectives are a little more glowing than one would have expected. High optimism because of, recovering consumption, continued capex push by the government, strong bank and corporate balance sheets, easing liquidity, financial conditions, a resilient services sector. What they're not pointing out is that rural has done very well, not urban consumption so much. Government capex is very good, private capex is not so good, but those nuances are not there. The one conclusion the bond market can draw is, therefore, will they not cut too much? Are there only 2 more rate cuts, not 3, as some were expecting? That it leads to that kind of a doubt because the optimism stands out.
Lata, many thanks for joining us. And we're not done with the RBI annual report because it also highlights that the total number of bank frauds, while they fell by 33% last fiscal when compared to FY24, the fraud amount has risen nearly threefold to over 36,000 crores, with public sector banks accounting for 71% of the same. Ritu joins us now with more. Ritu, take us through some of the key highlights of what the RBI is saying when it comes to bank frauds.
Well, let's start with something that always raises eyebrows, and that's bank frauds. In FY25, the number of fraud cases actually dropped by a third compared to the previous year. But here's the twist. The amount that was involved actually tripled from FY24, hitting a massive 36,014 crore rupees. But the spike is explainable because a big chunk of more than 18,000 crores actually came from 122 older cases that were initially missed and then reclassified as frauds later. Now, when we look at where the damage was, public sector banks bore the brunt, making up for more than 71% of the total fraud amount, while private banks saw the highest number of cases. In other interesting highlights, India continued to shine when it comes to digital payments. It accounted for 48.5% of all the global real-time payments driven by UPI. Digital payments surged, with total digital transaction volumes rising by nearly 35% and value by 18% year-on-year in FY25, with UPI leading the growth. Overall, 99.9% of all the non-cash retail payments were done digitally in FY25. But even as digital payments continue to rise, cash is not really going anywhere. The value of banknotes in circulation went up by 6%, with the 500 rupee note making up 41% of the volume, followed by the humble 10 rupee note. Now, here's something new as well. The central bank digital currency, or the e-rupee in retail, that rose by 333% in circulation to more than 1,000 crore rupees in FY25, and the CBDC pilot now has 60 lakh users in India. And finally, some good news on the fake note front, where the number of counterfeit notes detected was down to 2.17 lakh pieces in the year.
Ritu, many thanks for joining us. Let's talk about the commodity markets. Now, oil prices rose after the U.S. court blocked U.S. President Donald Trump's tariffs from taking effect. Supply concerns on account of Trump's threat of potential new sanctions on Russian crude have also pushed prices higher. Meanwhile, gold prices hitting a one-week low this after the court's decision came in, which dampened the metal's safe haven allure. A robust dollar further pressured the bullion. U.S. Vice President J.D. Vance reiterating the Trump administration's support of cryptocurrencies, saying that the White House was an ally and a champion of the digital assets. Speaking at a Bitcoin conference in Las Vegas, Vance declared that the U.S. government rejects regulators and promised to fire anti-crypto regulators like the current SEC chief, Gary Gensler. Take a look.
And I'm here today to say loud and clear, with President Trump, crypto finally has a champion and an ally in the White House. We've got to clean up the wreckage that the last administration left us. And since day one, that is exactly what we've been trying to do. Our administration, we prioritized eliminating the rules, the red tape, and the lawfare that we saw aimed at crypto by our predecessors. We're ending the weaponization of federal regulations against this community. To put it simply, Operation Choke Point 2.0 is dead, and it's not coming back under the Trump administration.
J.D. Vance going all out for cryptos, and Bitcoin has been on a bull run for last year, with the currency up 60% in just the last 12 months. Manisha's here with more. Manisha, plenty of action there in the crypto market, especially as the Trump administration throws its weight behind cryptocurrencies.
Oh, well, yes. Cryptocurrencies as a segment has continued to do well for 2025 in sense of prices, market capital and institutional adoption. If you look at the market cap, that's at around 3.6 trillion. This is derived from nearly 16,690 cryptocurrencies tracked across 1,277 exchanges in the global markets there. Bitcoin has gained up by 50% since the month of November 2024. That is when Trump put out that election victory there. Also, Bitcoin hit an all-time high in the previous week itself at around 111,000 per Bitcoin. Well, while we have seen President Trump continue to say that they will make U.S. as the crypto capital of the world, it was just this week itself that we also have seen U.S. roll back a guideline which urges companies to, exercise extreme caution when they are looking at cryptocurrency, especially offering crypto in their plan of 401k. This is what goes in for pension funds and various other funds as well. Apart from that, the annual Bitcoin conference in Las Vegas also has gained in shape, form, and the kind of attendance it is seeing. This is the first time ever since it started that you have a sitting U.S. vice president delivering a keynote notice there. J.D. Vance also said that he himself owns cryptocurrencies, also urged the crypto executives and enthusiasts to continue to put Congress for more crypto-friendly legislations there. Also said that the President Trump will sign a legislation as early as August on stable coins. So a lot of positive moves coming in really from U.S. and various other parts of the world as well, which is keeping cryptocurrencies in a very strong favor.
Manisha, many thanks. And staying with cryptocurrencies, Bharti Enterprises Chairman Sunil Bharti Mittal has called for urgent regulatory clarity on cryptocurrencies, citing the sector's unprecedented growth in the last few months. Speaking at the CII Annual Business Summit, Mittal stressed that India cannot afford to stay on the sidelines. Take a look.
Things have started to move very fast on crypto. And of course, AI, we already discussed, is moving very fast. And this is an area where the government will have to start applying their mind on how to ensure that the right regulatory framework is available for India to make full use of AI, crypto, whenever the time comes.
Well, regulatory clarity are needed in India for cryptocurrencies. That's Sunil Bharti Mittal. We'll head into a break, but up next, Tesla CEO Elon Musk leaves the Trump administration after a 5-month stint at the Department of Government Efficiency. That and more when we return. Chip giant Nvidia reported a strong set of numbers in the first quarter, posting a record quarterly revenue $44 billion. This comes despite the company's inability to ship semiconductors worth $2.5 billion to China on account of the restrictions imposed by the U.S. government. The company's data center business also recorded a growth of 73% on an annual basis. Nvidia said it expects around $45 billion in sales in the current quarter. The company's CEO Jensen Huang has warned against curbs on China, saying the platform that wins in China will lead the world. Take a look.
The platform that succeeds is the platform with the most developers. Just like iPhone's successful because of lots of developers, Windows successful because of lots of developers. All these platforms succeed because there are a lot of developers. China is home to 50% of the AI researchers in the world. And so we want the world to build on American technology stack. We want every developer in the world to prefer the American technology stacks.
That's Jensen Huang there, the CEO of Nvidia. And Tesla CEO and billionaire Elon Musk has exited the Trump administration, bringing an end to what has been a tempestuous 130-day stint as a special government employee heading the Department of Government Efficiency. Musk took to X and thanked the U.S. president for the opportunity to slash what he called wasteful federal spending. Musk's off-boarding announcement has come days after he criticized Trump's tax cut bill. Here's a wrap of Elon Musk's controversial tenure as a key figure in the Trump administration.
Elon Musk is leaving his role in government. A White House official confirmed the move late Wednesday, saying the billionaire's offboarding would begin the same night. Musk set out to slash government spending, saying in March he could cut at least $1 trillion off federal expenditures.
If we don't do something about this deficit, the country's going bankrupt.
But DOGE attracted huge controversy, with critics saying it was making indiscriminate cuts that threatened vital services without even delivering the promised savings. The controversy may also have done deep harm to some of Musk's businesses. Tesla sales have slumped in some markets, notably Europe, amid anger over his embrace of far-right politics in some countries. Now he says he'll devote himself to business again, and says his firms will be revived with world-changing products, including humanoid robots and robotaxis. Signs of a possible rift with Trump had been apparent in recent days. On Tuesday, Musk criticized the president's big tax bill, saying it was too expensive and undermined DOGE's efforts to trim the budget deficit.
Well, that's the end of Elon Musk at DOGE heading back to business. Now, global cosmetic giant E.L.F Beauty has bought Hailey Bieber skincare brand Rhode for $1 billion. This comes as the beauty giant plans to expand its footprint further into the skincare segment. The transaction will comprise of $800 million in cash and stock, including an additional potential of $200 million payout based on Rhode's performance over the next 3 years. This will be E.L.F's biggest acquisition to date. So Hailey Bieber sells her company Rhode to E.L.F for $1 billion. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. But for now, from all of us here on the team, goodbye. Thanks for watching. Stay tuned. The news will continue.